David Morgan with the Weekly Perspective. I want to start with the credit markets or the debt markets. First of all, it appears strongly that the bond markets, U.S. bond markets, peaked in July of this year, and they've been in a downtrend ever since. Recently, the bond market on the 10-year broke the 200-day moving average on a gap down. Certainly, this is concern for everybody that follows the most important market of all, and that, of course, are the debt markets. Furthering that, if we look at the corporate situation, the highly liquid, very top-tier AAA type corporate bonds have dropped as well. Not as much percentage-wise as we've seen in the treasuries. However, they are below the 50-day moving average and also did a gap down just a few days ago. Something to certainly keep in mind that not only are the government bonds feeling pressure during the current situation, but also the corporate side as well. Lastly, what I'd like to point out is what we briefly mentioned in the debt bomb in the Silver Manifesto, and that is the correlation between stocks and bonds is no longer inversely correlated. They basically move together. So if you are seeking safety from the stock market, move into bond markets, consider that again. It's really not that safe a move because they're basically correlated at this point in time and have been for quite some time. Moving on to the precious metals, gold this week is basically lackluster, not a lot of movement. We saw gold hit a bottom at about the 1250 level, find support. It traded in a small range for quite some time, and we've got a lift recently up to about the 1275 level basis the US dollar. And it's looking stronger, and certainly a rally is taking place, and it could go further. I am a bit concerned based on the commitment traders structure at this point in time. However, the metals, both silver and gold, have been trading differently basically from the beginning of this year, which means that the open interest has gotten to very, very high levels. Sell-offs have been orchestrated a few times, and then this last one certainly dropped gold about $100 and silver $2 or so, and they're rebuilding now. But from the level that they started to move up does beg a little bit of concern. However, it's an unknown. It is to be determined in the future. Regardless, there's not a lot of resistance on gold until it gets back up to the $1,300 level, and silver basically back up to the $20 level. Some interesting news has been coming out in the silver market. If you are so inclined, you might check out USA Watchdog. He did an interview with Cliff High, and Cliff had a lot of interesting insights into several matters, but particularly into the silver market. That's going to conclude it for this weekly wrap-up. I will mention that the November issue of the Morgan Report will be issued this weekend, and that we have revamped the speculative section quite substantially from what we've done, let's say, over the last few months. We've brought in several companies that we feel have very good merit, but these are speculative situations. But we have over 5 of them, and the last one that we put out an alert, and I mentioned briefly a week or so ago, is looking at about a 40 ounce per ton yield. This is something that you haven't found in modern times. Very, very rare do you find a silver mine with those kind of grades, and this is something that is very unknown at this point in time. I'm certain that over time it will be discovered by others in the industry and probably brought to the attention of many that watch these videos. Make a great weekend. I will be back with you after the Germany Metal Show. I will be leaving early this week, and I'll be back next week for another update.